Hello, you're probably watching this because you're wondering how the government's compound interest waiver scheme is going to affect your loan or credit card dues. Well, the first thing that you need to know is that the scheme is meant to give relief to all borrowers with loans of up to 2 crore rupees, irrespective of whether or not they opted for the moratorium between March and August of this year. Let's get into a couple of illustrations that will help you better understand what's being done. At this stage, we're working with the assumption that the government scheme hasn't yet been announced. Now, assume that I've got a fixed rate home loan of 10 lakh rupees at 8% that's repayable over 10 years. To make this simple, we're assuming that my first installment was due in March of 2020. My first EMI is 12,133, out of which the interest component is 6,667. Now let's assume that I took the moratorium at the start of March. The bank grants me the moratorium, but two things start to happen. The bank continues to accrue the interest that I owe over the next 6 months, and it also starts charging me compound interest. Remember, this is a moratorium and not an interest holiday or a loan waiver. So the 6,667 rupees in interest that I owed in March goes and sits on top of the outstanding principal at the start of April, and in April the interest that I have to pay is calculated at 8% of that higher principal divided by 12, that's the monthly amount. And over the course of the next 6 months of the moratorium, this keeps happening till my principal at the end of August stands at 10,40,673. This includes simple interest, that is 8% on 10 lakh for 6 months, which is 40,002, and interest on interest, that is 671 rupees. Now the government scheme wipes out this interest on interest charge, so I don't have to pay that additional 671 rupees at the end of the moratorium. In September, I can either clear the accrued interest in a lump sum along with the EMI and continue with my original 10-year repayment cycle, or the tenure of my loan gets extended by 6 months. But what if I had not opted for the moratorium in March and continued to make payments? According to the details of the scheme, it is assumed that I had availed of the moratorium and the interest on interest that would have accumulated gets reduced from my outstanding loan as something of a reward for having made all the payments on time. In this instance, my outstanding loan amount reduces by 671 rupees. Now, what if my home loan was a floating rate loan and the interest rate on it fell from 8% to 7.5% during the moratorium? Well, that would not matter because the scheme very clearly states that it will not account for any changes in the interest rate over the course of the 6 months of the moratorium. Finally, what happens to credit card dues? In a sense, it's similar to the earlier example. The government has said that the credit card issuers can't charge the rolling rate, which, as you know, is as high as 36 to 38% per year. According to a senior banker that I spoke to, the rate that is going to be charged on credit card dues in this instance for the scheme will be 18 to 20%. Let's quickly go through another illustration here. Assume that I had credit card dues of 1 lakh rupees at the start of February and I availed of the moratorium. Interest at 20% would accumulate over the course of the 6 months, and the interest on interest component would amount to 424 rupees, which would be waived because of the government scheme. So at the end of the moratorium, I would owe the credit card company just over 1,10,000 rupees. If on the other hand, I had paid back the dues in March, I would get the benefit of 424 rupees. Now, according to a banker that I spoke to, this will likely get adjusted in the credit statement. Effectively, it will be set off against future dues. So the bottom line is that you're not going to see a major difference in your loan repayment unless you have a very large loan and you're in the early part of the loan repayment cycle, because that's when the interest component in your EMI is the highest. I hope that this video helped you out. If you've got more questions, you can write to us in the comment section or on any one of our social media platforms. Don't forget to check out the website for more news and updates. Thanks so much for watching. This is BloombergQuint.